Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is December 1st, 2012. Lots to talk about, so let's get crack-a-lacking. But before I do, thank you very much for all those likes that I had on my previous video. I do appreciate it, and I do very much appreciate the comments that you guys have been posting. It does mean a lot to me, so thank you very much for that. Alright, before I move forward, I just wanted to let you know the monetization of the videos that I talked about in last week's video doesn't seem like it's going to happen unless I change my software. I reached out to the software company that I use to make these videos, asking them if I can use their videos in their software in my videos, and they said, you know, they have to talk to legal and whatnot, so that might take a while. If not, it may not even happen, so I'm not going to keep my hopes up. In any case, I'm not going to stop making these videos for you guys because you guys are awesome people. So you know, anyways, let me just get right into the analysis. Again, please don't mind my grogginess, or please bear with me. It is very early in the morning, but I want to try and get these videos out to you guys as soon as I can. Alright, so the SPY, this is the chart obviously of the SPY, which is the ETF that tracks the S&P 500, and it is the daily chart. And please forgive me if I go into a little bit more detail, if I talk a little bit faster, because I just don't want this video to be too long, so I'm going to have to put in more information and talk a little bit quicker, and it's simply because I got a couple more subscribers to the channel, and so I just would like to say welcome you know, to the new subscribers, and I'm gonna try and, you know, explain this a little bit better, with the expectation that maybe you're not familiar with the way I trade. And of course, this would be a good refresher course, not refresher course, but you know, a good refresher to all of my subscribers right now, to let them know exactly how I trade and why I do certain things and why I don't. But before I do that, I'm going to do the regular analysis first for the current members that, not members, but current subscribers that I have on the channel, and then you know, I'll move into the refresher kind of thing after I'm done. Okay, so anyways, let me just delete these lines here because they're not really needed. Let me just make sure I got a fresh load here first. Okay, and so basically, let me take a look here. In the previous video, on the November 26th, which is this candle over here, we talked about the possibility of pretty good resistance at the 50 moving average. We have this upper trend line here, and we are also into a gap fill area right here, so we're going to see some resistance in this general area here. I still did not execute a short trade, or I still did not pick up SDS yet, and the reason is, like I discussed in a previous video, what I really like to see is a tag of one of these two resistance points here. Preferably, I'd probably take a short trade at the 144.07. Now keep this in mind. We do have two doji candles created on Friday, Thursday and Friday, but we did create them on lower volume, and you guys know, you original people that watch my videos know how I feel about a reversal candle without volume. Simply put, I will not take the trade based on a doji candle alone, and without that volume validating that. Okay, so we have this up move here. We kind of consolidated first, right? So we had this up move, we consolidated, and then we created this huge candle over here. And a lot of people are looking on the internet, they're like, oh, this is an engulfing pattern. This is, just to let you guys know, this is not, in my opinion, an engulfing pattern. An engulfing pattern will happen in a straight up move, and then you have another candle engulfing this, which would be a red candle, as a reversal. Engulfing patterns are reversal patterns. This is not a reversal pattern. This is a continuation. Well, it's not a continuation pattern either, but it continued higher. Okay, so basically, when you see this kind of move here, it is not an engulfing, because an engulfing is a reversal, and this is not an indication of a reversal. We also have this up move, and it consolidated first, right? These two candles here was consolidation, and then it broke higher. That's basically what it is. It has nothing to do with this here. However, you guys know how big I am on volume, and this candle here made this move here on higher volume, and the volume was higher than the past 3 days. It was actually higher than the past 1, 2, 3, 4, 5, 6 days. Okay, but just because the volume was higher the past 6 days, all that tells me is that this move is a strong move, and that either we're going to have a flat day the next day, or we're gonna slightly continue higher and float right into these two resistance points, which is exactly what we did. Let me just show you this upper trend line here. We have this pivot point there, and then we have a pivot point here creating this trend line over here. Okay, so that gives it a little bit more validation that we may see a pullback. So you may ask, well, if I think there's going to be a pullback, why not take the short trade? Because simply put, no volume. Okay, and I missed the trade here because I got greedy and I didn't. I did a calculation on the SSO instead of just looking at the calculation here on the SPY. Um, this is a little bit different. This is the style I trade keeps me safe. It may not keep me in the money, but it keeps me safe. And I've been trading for so many years already, and I've lost so much money that this type of discipline that I've learned to have is very important to me because I just don't want to lose money anymore. If I miss the train, then so be it. I'll wait for the next trade. Okay, so let's just say, so two things, right? I'm waiting for a tag of the 144.07, and that tag is not like this where we go up, consolidate, right, above this upper trend line, and then give me enough power to go higher. That's not what I'm looking for. I'm looking for possibly this being the consolidation pattern and then breaking higher, maybe right into these two calculated levels there and this upper trend line, and then I'm definitely buying either SDS or I'm going to short the SPY. It's a either or kind of thing. Now let's just say, because we are creating these two doji candles, even though it's not on volume, it doesn't mean it's not going to reverse. Okay, it's just gives me more odds in my favor that it will. But right now, it never does mean that it's not going to reverse it. There's a strong possibility that it may reverse because we are into a gap fill over here, right? And even if it did continue higher, we also have a pivot point up here. So there's going to be a lot of resistance all the way up here. All in this area up here is going to be a lot of resistance. So I'm just going to be patient and wait for it to get there, if it even gets there. Now, if we reverse, where am I going to take a long trade? Probably around this 139.21 level. And that's definitely going to be how the pattern looks first, because if this turns out to be a pivot point, what does that mean? That means we are still in a confirmed downtrend. There's nothing changed, right? Everybody was saying, oh, the market's in the uptrend, the market's in the uptrend, go long, the market's going to go long. And that's fine. They might be right. I'm talking about CNBC and stuff and some people on the internet. I'm not going to argue with them because the markets, I mean, nobody knows 100% what the markets are going to do. Okay, nothing is guaranteed, especially in the markets. But if we do happen to turn over here, okay, what does that tell you? We have a high, lower high, lower high, lower high, and yet again another lower high. We have a low, a lower low, a lower low, a lower low, which means we could potentially make another lower low. Okay, so either we bounce here and then we create maybe a lower low, maybe we bounce here like so, we come down here, maybe we don't bounce there. Actually, we'll probably have a small bounce here, and then going back more, we may create actually a lower low into this 131.58. Now, I'm not saying that that's going to happen. I'm just saying that's going to be a possibility until I see a change in trend, meaning we have a higher high, possibly anything higher than this pivot point here, a higher high, so we get any close above here, and then a higher low, which is any close above here, which it will tell me that we are now in a confirmed uptrend. And when I say uptrend and downtrend, I'm talking about the daily chart, because that's what we're looking at, is the daily. And if you want to look at a little bit longer term, then we want to look at the weekly. So this is the weekly chart of the SPY, and simply put, we are still in an uptrend on the weekly, right? So we have this pivot point, we have this pivot point, and now we have a trend line. We have this pivot point, and we have this pivot point, and now we're in a trend line. What we're basically doing is we're in this channel here. Let me just delete all these. Let me just delete everything here. Okay, a little bit easier to understand now. We're basically in this channel, and so this pretty much tells me that we closed above the 20 moving average. We didn't validate the close above the 20 moving average on the weekly, but the fact remains the markets are still a bit strong there. So there is a possibility that we could, maybe pull back the next week if we get into that resistance point we're looking for. So the pullback, we know, is going to be short-lived, but on the weekly chart, we're still in a confirmed uptrend. So just keep that in mind. But the weekly is definitely going to be on a longer term basis, meaning, obviously it's going to take a whole week just to make one candle. So just keep that in mind. But we are short-term traders, or at least I am, and these analysis is meant more for short-term trading. And so right now we may have a small pullback and then reach into this 144.07, and then hopefully I get a much bigger pullback. But because the weekly is still bullish, we have to be careful that this daily downtrend could potentially change at any time. Okay. So to make a long story short, we're gonna have these two doji candles here without volume. If you wanted to take a short trade, you could. Any close, and a validation above this 50 moving average, meaning a close. Let me zoom in here for you guys. A close above this 50 moving average. You notice it has not been able to close above it yet. And then another day where it validates that close, meaning it closes above the high of this candle's high. Okay, and then that validates that it may continue higher into the 144.07 level, and then you would in that case stop yourself out and then jump back in on the short side, either on this upper trend line here or the 144.07 level. This market is in an oversold area right now. It's not really oversold, but it could go a little higher as far as that goes if you wanted to wait. But so there is still that potential that we may get a reversal down here. So the chances are going to be higher if you take a short trade now, because you could definitely still do it. It's not too late. But again, I'm gonna wait for it to get over here. Okay, so this is pretty good resistance here. Don't get me wrong. So I wouldn't blame you if you wanted to take a short trade around this area here. In fact, I was seriously thinking about it, and any close above this 50 moving average, I would just stop myself out and then wait for the next move up. But being that there's so much resistance up here, then I'm probably just gonna wait. And if I miss the train again, like I did down here, then so be it. Alright, this is the chart of the US dollar futures. As we all know, the dollar is inverse to the markets, and dollar up, markets down, and dollar down, markets up, right? So we looked at it over here at 81.26, and we got a huge rollover, a very nice rollover of the dollar, and then we closed below this trend line here like it was not even there, which is good because the next time up, this is going to be pretty good resistance, okay? But we basically came down. Say this line wasn't here, so let me just take this line out. So we basically came down, and now we just consolidated over the 50 moving average, which is expected, right? I mean, we all know that always happens when you hit a level. Either you get a bounce, right, back into your resistance point, or we start consolidating to build power to push down lower. And that's basically what the dollar looks like it's doing. The reason why it starts consolidating at the 50 moving average is because right around here we have the support levels all over here on these pivot points. What do I think is going to happen? Well, nothing goes straight up and straight down. Obviously, we all know that. But because we are consolidating here on the dollar, there is a potential that we could continue down into this bottom trend line that it's created here, and I'm going to probably bank on that. The 79.16 calculated level here is still valid, meaning we could actually go all the way down into the 79.16 level, and it still would not change the trend, right? Because we have a higher low, and if we hit the 79.16, it's still higher. It would still be a higher low than here, so that wouldn't change the trend from down to up, which means that if it's inverse to the markets, then that means markets could continue a little bit higher here, right? Markets can continue up and then have a pullback. So we just talked about that. So imagine if the dollar can get down to this bottom trend line here. That means the market has a potential of getting all the way up there before getting a bounce on the dollar, which is a pullback on the markets. You see, that's why I like to wait and be patient. And again, nothing's 100% guarantee, but I'd rather not lose money. Meaning, if I take the trade here and it continues higher, then I'm losing money, right? If I short here, then I gotta wait for it to come all the way down here before I'm in the green. Now let's just say I don't take the trade and it continues down, I still don't lose money. Or let's just say I wait for it to get up here, I take the trade and it continues all the way up to this 145.07. My losses aren't going to be that bad at all, right? All right, now this is the cool part. I mean, everybody's. I mean, it continues to blow my mind how these calculations work and how well they work. Again, the calculation is almost a year old. Okay, so it's still pretty brand new. Let me just load drawings here. All right, this is the daily chart of Apple. This is a chart that I always do analysis on because Apple is obviously the biggest, one of the bigger market movers as far as stock goes that we have. And you know, I obviously waste a lot of time making these videos, jabbering about things that I shouldn't be talking about. Anyways, Apple, we had this calculated level here at 591.51. We also had this calculated level here at 511.38. So we all know we had this nice bounce off of Apple off this calculated level. I'm just going to save these drawings here so I don't forget. And then we had a very nice move all the way up into this 591.51. Then we get a nice pullback back into this support level here, which used to be resistance. Okay, this is just from the pivot point here, so that's expected, right? And then we get a bounce back into the 591.51 level again, just unbelievable. And then now we start pulling back, but the pullback isn't very much. Now if you look at it very closely, what is this really? Let me just delete all the lines here so we get a better overview. Okay, so basically Apple came down, we had a small bounce here, right? Now we're just basically consolidating, right? Okay, so just keep that in mind that Apple does have the strength to push higher. It is a possibility. Now the only thing contradicting that theory is these two moving averages right above it here, that's, you know, creating a ceiling for it. So it's coming up, it's going back, and it can't get past these two moving averages here, so it's just going to consolidate, wait for it to build enough strength to push through it higher. This basically just tells me that there is a possibility when I see two moving averages up here, I don't even touch the stock because I don't know if it can break through the two moving averages or not. And because Apple is in a confirmed downtrend on the daily chart, we don't want to touch it until we get a close and a validation close above this pivot point here. This is literally still in a downtrend, so you want to keep that in mind. So if anything, I want to see a push higher, maybe into the 50 moving average here, before we get another drop, and then I would short Apple if anything. So maybe in the 598.86 level, I'd probably take a short, or worst case, I'd probably wait to the 672.90 level, simply because Apple is such a big stock, it makes big moves in one day. You don't want to get too greedy, and Apple is still a strong stock. But as you can see on the weekly chart of Apple, it is slightly turning over. What do I mean by that? Let me just delete all the drawings here. We have a low and we have a lower low, and even if you take this low is still lower. Okay, it didn't close below, but it doesn't matter. It doesn't matter on the close. It's the pivots. So all we need, because this is a high and a higher high, all we need is a lower low. So let's look at it at the 20 moving average here. Let's just say it pulls back at the 20 moving average here. 623.58. Let's switch back to the daily. 653.28 is going to be right around approximately here. It's just right at this pivot point here. Okay, so you know what, to be honest, let me just delete this. Keep that in mind there. Let me load my drawings, and I got nothing. I got a 672.90 for a short. I don't have anything here as far as a calculated level. It doesn't mean it's not going to be good resistance, it just means I don't have a calculated level there. Therefore, I will wait to the 672.90 to hit first. Okay, so that's Apple. Alright, I'm already into 18 minutes. So for the new people that just subscribed, so the original people that that's been with me for a while, you can turn off this video if you want to. But if you want to refresh your course, I'm just going to explain and run through this real quick. And for the new people that just subscribed, you'll pretty much pick up as we go along. In any case, what I normally do, and it's going to be the opposite for the same. A lot of times in the past, what I used to do is, let me just delete all the drawings here so it's easier to see, is I used to make trades. Like this one is a perfect example. People look for this down move, and then they look for a consolidation pattern, right? And then they short, okay? And then they put a stop maybe above the previous pivot point there. I've seen some people do that. But my problem was, simply put, I could not figure out, like for example here, we would consolidate and then we would punch higher all the way up into the 50 moving average, and then I would stop out and then it would come down anyway. But does that mean that I should just be patient because consolidation patterns are going to work anyway? No, that obviously there's no way. Consolidation patterns do work. Okay, don't get me wrong. I mean, we see it. It's a common pattern every time. Down, consolidate, down, like bigger consolidation, down, right? No consolidation. We just pop right back up. Consolidation patterns are everywhere. Okay, they're everywhere you look. I mean, there's a consolidation pattern here, but it was kind of a big one. I would have shorted around that area there, but she spiked higher before coming back down again. She didn't close above here, which wouldn't have stopped me out. But needless to say, this is a very long period of time. But in any case, I should say, consolidation patterns for me don't work too well. And I'm going to tell you guys something. There's a lot of technical analysis data out there, trend lines, there's moving averages, there's Fibonacci retracements, etc., etc. It may work well for one person, okay, but it may not work well for you. So you have to find something that works well for you. My strategy and my techniques may not work well for you, but hopefully it does. And so you have these head and shoulder patterns, you have inverted head and shoulder patterns, you have the cup and handle patterns. I mean, you name it, I probably know about it. I've experimented with it, I've traded it, and it probably after years of trading, it just didn't work out for me. So what I do is I follow very, very simple basic rules, okay? Volume is the most important thing. That is something that is has been proven not only in the stock market, it's been proven for just supply and demand type of situations, and that's why volume is so important to me. Do you need volume for a market to bounce or pull back? Absolutely not. It can bounce or pull back at any given time, but I just use volume as a supporting way of giving me the odds that it may move in a specific direction that I'm going to hopefully trade in, right? So volume is the biggest thing. Everybody on my videos knows about volume. And another thing about volume, in addition to volume, I also need to see some sort of reversal pattern in candle charting, because candle charting is obviously an indication of human emotion, right? It's a read of how the majority of traders think. Now, is it 100%? Obviously not, but that's why we combine these things. So now we have volume, we have candle reversal patterns. So we have these two candle reversal patterns here, which are doji candles. They didn't come from a straight up move, they came after a consolidation pattern. So there's only this one day. And then we created these dojis. I don't trade that way, okay? So not only do you need the doji candles or engulfing patterns such as this one here, where this candle engulfs a previous candle, and in order for me to validate any type of candle reversal pattern, it needs to be after at least 3 days. This was literally only 2 days, but as you can see, even on the reversal here, right, engulfing pattern, big candle on higher volume, right? But it wasn't higher than the past 3 days. It couldn't have been because we only had 2 days before this doji candle was created. That tells me I may or may not stay in the trade. That's a little bit more risky, but it's it still puts the odds in my favor, and sure enough, it comes crashing down, right? um so we have these doji candle patterns over here. This one was higher volume than the past 3 days, and then it reversed like it like like you would have expected it to do, and then you're good to go. Now, in addition to a reversal candle pattern, my favorites are shooting stars, hammers are the strongest, okay, in my opinion, and then you have engulfing patterns, and then you have haramis, which are the weakest, but I still consider it. Those are the candle reversal patterns I'm talking about. I have books and books. Trust me, I've spent a lot of money on books on candle patterns, and I normally stick to just those. Okay, single day candle patterns and maybe 2 day candle patterns. But the main ones are like dojis. Doesn't matter if they're gravestone dojis or regular dojis. That does not matter to me. It does put more. It gives it a little bit more weight if it is a gravestone doji in a pivot point area, but to me, the hammers and the shooting stars are the best ones that I look for. It's a no-brainer, which is why I should have took this trade over here as an example. Everybody knows I missed this train here, which kind of sucks, but this was kind of like a hammer candle. But as you can see, the volume was very nice over here. And in addition to all of this, we were in an oversold condition. So in supply demand technology, the supply and demand, basically we were oversold, really oversold around this area here. So I really should have taken this trade because I missed this nice rally over here, which kind of sucked because I got a little bit greedy. Um, then, in addition to that, what I really rely heavily on is these mathematical calculations that I invented last year in December. All these dotted lines here are mathematical calculations that is just basically a mathematical formula that I input data into, and it spits out a number, and then I slap the number on my chart, and it becomes resistance, it becomes support, and it becomes resistance again, so on and so forth. The 135.40 level held up very well, and the way I trade these levels is, for example, why would I take the trade at the 135.40 and not the 131.58? It's simply put, if price never gets to the 131.58 as an example, then I never take the long trade. You know what I'm saying? It's not saying that price is going to get to these more formulated levels. All I'm saying is that there's a high probability or a higher chance. Nothing's 100% obviously, but there's a higher chance that you will see support or resistance if it does get to one of these levels. Okay, that's all it means. And these mathematical calculations, as everybody's been watching my videos, has been working out very, very well as of late. So again, the reason why I didn't take a short trade here is because I want to wait for the 144.07 level over there. If it never gets there, then I never take the short trade, right? So what do I mean by that? I mean, I'm not going to go long here thinking that it's going to go to the 144.07 level. I'm just going to wait to take a short trade if it ever does hit this 144.07 level. So that's the basics to the way I trade. I need to see a candle pattern, I need to see volume behind it, and I need to see some sort of support and resistance. Trend lines are important to me because they work well. Gaps and gap windows and gap fills are very good support and resistance areas as well. Pivot points, way heavier to me in my opinion. Gaps and gap fills work well if there's other supporting factors. You know, like this one is multiple supporting factors here. We have this trend line. It's kind of a weak trend line, which is why I don't really consider it that much of a trend line. We have a pivot point here and a pivot point there. It's kind of weak, but it is still a trend line. We are right into a gap fill here, you see that, and we have this 50 moving average. I use the 50, the 20, and the 200 moving average. We have three indications here right now that there's going to be a possible reversal. We also have a pivot point right above that, which tells me that even if it does pass here, we're going to run into resistance very shortly. So if you don't want to miss the train, I would take the short now. If you want to wait and take the chance of not missing the train, and if this does continue higher, because obviously nothing's 100% guaranteed, then you won't be losing as much as if you were to take it right here. Okay, so that's pretty much for you newcomers here how I trade. It's very simple. Most people come here, in my opinion, I think, is for these formulated levels, because nobody else is going to have these formulated levels here, or these calculations, because I've never seen anybody with it yet. And just to keep to let you guys know, because I'm already in 28 minutes, real quick, be very, very careful of those people who actually charge for services such as the one that I provide here. It's okay to pay for one, don't get me wrong. If it works for you, stick with it. But if they don't work for you, don't stick with them thinking that they're better than you, because like I said, everybody has their own way of trading. Their methods may be different from methods that may work for you. The ones that you have to be very careful about are the ones that say, okay, take a short trade here on stock XYZ, and then they make their video and stock XYZ doesn't do as well as they somehow sold it to you as it did. Meaning, a lot of people I hear, to take this trade because of all of this, I'm telling you right now, take the trade. And then so you take the trade and then it goes against you. In the next video, they'll do their analysis and they'll never ever talk about that stock ever. And then if that stock or a stock happens to go in the direction that they said it would go, there's always a 50-50 chance it's going to do that if they don't know what they're doing. But in trading, you don't want the 50% chance, because that's why you use analysis to put the odds in your favor. You want it to be like 90% chance in your favor. although 10% is still a big chance that it may not go in your favor, but that's why we have stops. In any case, moving forward, if they, if the stock goes in their favor and it moves up and you took that trade and you're making money, in the next video they start bragging about the stock that they chose and it went into that direction. And so those are the ones you have to be careful about. But at the same time, it's easy to get into that big-headed trap like I kind of did. I know one person posted saying that I wasn't being big-headed, but I just don't want to fall into that trap where if I make a call and it goes in my favor, I do get excited, right? Obviously everybody gets excited when they make the right call, but I'm gonna try and pull back. And if I need to be humbled and you guys think that I'm being big head, please let me know and I'll try to humble myself on my own. In any case, I'm already into 30 minutes. I just wanted to let you guys know that, especially for the two new guys who just subscribed. I do appreciate you guys subscribing, and you might be women, I'm not sure, but in any case, I do appreciate it either way. Keep clicking the like buttons. It does help me, emotionally to continue to make these videos. And thank you very much. God bless to you all, and I wish you the best of luck for next week's trading. You guys already know what I have planned. If anything changes, I will definitely make another video and let you guys know if anything bad, happens or I change my mind in my analysis. In any case, thank you very much again, and I hope to see you in the next video.